Hello, everybody. Today is Tuesday, August 30th, 2022. I am Jeff Sherman, co-host of The Sherman Show, along with my co-host, Sam Lau.
Hey, hey.
And today we have a very special guest who is coming to us from our YouTube channel as well. So those of you listen on to your podcast medium, if you would like to watch the video of this and see Sam and I's attempt at trying to bring some fashionable attire to the podcast today, you can go to youtube.com/DoubleLine Capital. We do disable the comments, so you can't make too much fun of us. If you want to do that, you have to use shermanshow@doubleline.com and send us an email the old school way. So today we have the special guest, as I mentioned. He is Allen Sukholitsky, and Allen is the Chief Investment Officer of Masterworks. For those of you not familiar with Masterworks, it is the leading art investment platform for self-directed investors. Allen, welcome to the show.
All right, thanks so much for having me.
So, Allen, first of all, let's tell our listeners about yourself. Just step into this. You know, how did you get involved with Masterworks? What led you on a career down this path?
Yeah, so I spent the vast majority of my career in traditional investment management. So you can basically think of that as everything in the investment world excluding art. I spent earlier in my career at Citigroup, and then I spent the bulk of it after that at Goldman Sachs. Basically, my roles revolved around macroeconomic research, asset allocation modeling. I would publish research on, the merits of different asset classes for inclusion in a portfolio at different points in time, and then I would travel around and present those views as well. So that's basically what I spent most of my career doing, and so it is sort of an interesting question. How did I end up here at Masterworks? Ultimately making art an investable asset class. And the interesting thing is that I think there's a direct connection between what I used to do and how I ended up here, because I spent my whole career researching what I thought was every asset class under the sun, right? It's all the asset classes that many investors are familiar with: stocks, bonds, commodities, hedge funds, private equity, real estate, venture capital, literally everything. And so it's one of those things where you have this strange light bulb moment all of a sudden in the middle of your career where you come across this idea and you're like, wait a minute, how come I never thought about that before? What does that actually mean? So I had come across Masterworks, heard that they were investing in the art market, and that started to make the light bulbs go off in my mind, where I got more curious and I thought, how big is the asset class? What does performance look like? All these questions that I could have readily answered for every other asset class I had ever researched, all those questions started popping into my head. That's when I started to research it more and become more interested in what Masterworks was ultimately doing.
Well, I think as you think about the art world too, it historically has been associated with those in the upper echelons of the wealth demographic, right? You think of very wealthy collectors, whether they're magnates out there, whether they're on a ban list today because they have so much wealth. But if you think about it too, it is something where wealthy investors over time have used it to help diversify out. So, a lot of people want to talk about getting access to retail or individual investors. They talk about the democratization of an asset class or of a strategy. Is that how you think about, the Masterworks approach? Is that, giving access to more folks? Is it, just showing people that, again, small pieces to their allocation can be quite helpful? How do you think about that?
I think there is a pretty significant element of democratizing the asset class that goes along with what we're doing. But I also, again, and this is my background, because remember, I spent most of it in traditional investment management. I always think about everything I'm doing now in the context of all of that. And so I can't help but say, if you think about how other illiquid asset classes evolved over time in terms of who was primarily investing in them originally and how that changed. So let's talk about, let's say, private equity or hedge funds or real estate, venture capital. Those asset classes started to get invested in several decades ago. They were illiquid, and who were the primary investors? They were pretty much ultra high net worth and institutional. And it kind of stayed that way for a very long time until more recent history, where those asset classes started to become more readily accessible to broader segments of the investor population. But that whole process took several decades to actually happen. With us, when we launched Masterworks, we basically started out from the beginning making this otherwise illiquid asset class available to a significant portion of the investor population. So we didn't go along the same path that all of the other illiquid asset classes did, primarily ultra high net worth and institutional, and then eventually becoming retail focused. We kind of started out securitizing the asset class, offering it to self-directed investors from the outset.
Okay. And so, I hear securitization within there, right? So you're issuing something backed by this collateral. So can you tell us a little bit about how you guys approach, what to invest in? Does it need to be a Picasso? Does it have to be a well-known artist? Are you trying to look at burgeoning trends too? I think about some of the popularity across the auctions this year. How do you think about building that portfolio and creating, because it's going to behave quite differently, right? There's different kind of capitalization ranges, again, put it in the framework of a traditional asset allocator and walk me through some of that analysis.
Yeah, so I mean, this might take a minute or two to explain, but I do think it's kind of important. So I'll take a step back for a moment. A lot of us who have worked in financial services, you pretty much always have a need for data of some kind when you're working in the world of finance. Now, whenever you need that data, you go to any number of major data providers. All of the big banks, the financial institutions, they all have the data providers that they're typically accustomed to using. But the point is, all of that data is available to financial services professionals in some way, shape, or form. But here's the thing. Despite the fact that all of that data is available within the realm of finance, there has not exactly been a place where all of the art market information has ever been available. So what Masterworks had to do, one of its first projects when we started as a business several years ago, we actually hired several dozen analysts, and their job was quite literally to go through thousands of auction catalogs. Many of them were in paper format, and they took every single transaction from every page in all of those thousands of catalogs, and they put all of that data into a computer. We have since built what I like to call, using an analogy, I call it, we've built Bloomberg for the art market, except that there's a big difference between what Bloomberg does and what we do. Bloomberg ultimately sells licenses for its data. That's how all of us access a Bloomberg terminal. With us, this proprietary database that we built is just that. It's entirely proprietary, so nobody else has access to this data. So we basically have roughly 70 years worth of transaction history in the art market in our proprietary database. Hundreds of thousands of transactions. We track many thousands of artists. And what we do with that data is we ultimately analyze it to decide what areas of the art market should we invest in. So a lot of those sort of analytical projects that analysts on Wall Street will engage in when they might be thinking about individual stocks to buy or whatever other investment they might be involved in, we are effectively doing the same thing except for the art market, and except that we're the only ones with access to that data. So the first half of our process is entirely quantitatively data driven. That's the first half of the process. That's how we determine who are the artists that we're interested in investing in, and within that, what are the specific series that an artist might have painted that we want to invest in? And within that, what are the particular paintings within a series that the artist invested in? So we're analyzing that data to kind of filter through our universe to determine where to invest. And then the second half of our investment process, that's driven by an acquisitions team. These are individuals that have all of what you would think of as kind of traditional art market experience. They come from the major auction houses, the dealers, the galleries. So basically, they're working off of that initial sort of data-driven process of filtering the investment universe down. And then they go out and use their global network to ultimately source the different paintings that we're interested in investing in.
So within there, actually, as we're talking about the selection of these based on quantitative measure, Jeff and I come from the fixed income world, and a lot of times we hear about story bonds. On paper, the bonds might not look great, but they've got a fabulous story behind them, that kind of that X factor where it's unquantifiable, but it's qualitative judgment around it. I would imagine that kind of the objectivity and subjectivity when it comes to looking at art really is hard to to parse through, right? It's especially the ones that, come to the something like Masterworks from a finance background versus one that might come in from an art background that is more in tune with the art side of things.
Yep.
How does that kind of play into it when you're talking about, I mean, do you just focus on the big names, or are there people who you're looking at, you're just like, okay, I see this art, maybe they're trending on social media, I think this might be a big, a rising trend, a superstar, throw it into the portfolio type of thing. But how does that all get melded together, I suppose?
Yeah. So basically everything that I'm going to tell you about what we focus on, maybe what we don't, for all of this, I'm going to caveat it by saying it's driven entirely by the data. So the area of the art market that we focus on, first off, is specifically post-war and contemporary art. Now, if you want to divide the art market overall into different segments, you can think of post-war and contemporary art as one segment, Impressionist modern art would be another segment, and old masters paintings, let's say along the lines of a Rembrandt, that would be another segment. So the segment we focus on is post-war and contemporary art. That's the segment that has been appreciating for the last several decades at roughly 14% annualized. So by comparison, Impressionist and modern art has been appreciating at roughly, let's call it 7.5% annualized. And old masters paintings, quite honestly, they usually appreciate more or less in line with the rate of inflation. So let's say 1 to 2%, excluding recent history, of course, on inflation. But so the segment we focus on is post-war and contemporary. Within that, and this is again driven entirely by the data, we generally buy paintings that are between $1 and $30 million. And there's a reason for that. So the paintings that typically sell for less than $1 million, now I'm not going to say that that million is a hard and fast rule. Let's call it 500,000 to $1 million. Anything that's trading under that is what I like to call the venture capital of art investing. So in other words, there's a whole lot of volatility that you might experience based on whatever paintings you're going to buy in that segment of the market. That's not the level of volatility or risk that we thought was reasonable to be offering to our investors. And once you go over $30 million for a painting, the performance or the price appreciation of those paintings over time actually falls significantly. Not in the sense that they become negative. I just mean the performance might be, let's call it low to mid single digits, which might or might not be attractive for a large number of investors. So the segment that we focus on, in other words, sort of our sweet spot, is kind of that $1 million to $30 million range. Now, there will be a lot of big name artists. We like to focus on what we call blue chip artists. These are artists that generally have names that you would recognize. But it is more often than not driven by the data than it is necessarily just picking an artist that has a big name and wanting to invest there. In fact, now that I'm saying this, I just realized I could give you a good example. Damien Hirst, that's an artist who has a pretty widely known name. Damien Hirst often has works that sell for many millions of dollars. But what a lot of investors and a lot of, honestly, art collectors may not immediately appreciate is that Damien Hirst as a market actually has a Sharpe ratio close to 0. Now, by the way, if you're wondering, how is he even talking about Sharpe ratios for an artist in the first place? Well, again, it all goes back to our database, right? So you can imagine that the same way that you have data for stocks or the S&P 500 or anything else, with that data, you can calculate a Sharpe ratio. Well, with all of the data that we have for all the different artists and paintings in our database, we too can calculate Sharpe ratios. So Damien Hirst is just one example of a big name artist who we would not necessarily be interested in buying. And his Sharpe ratio for his market is quite literally close to 0. In fact, I think it is actually just slightly negative, to be exact.
Yeah, well, maybe people just don't like a bunch of dots on a page. I think the affinities went with Kusama these days. Like she's known for the dots these days, right? She's very popular. So let's get a little bit deeper into that as well. So you identify, this concept of the Sharpe ratio, right? And you're trying to assess historical kind of return per unit of risk, however you're categorizing that.
Yep.
And so as you think about it too, how do you get comfortable with this? Because I would expect to see, as some popularity of an artist take off, it goes very exponential very quickly. and kind of that value gets kind of sucked out of it. So how do you think about, there's obviously the ability to buy an asset, but what do you talk about on the investment discipline to sell assets as well? So walk us through that.
Yeah, so on the buying side, I mean, the description you just gave about an artist, let's say, who all of a sudden starts to take off, that is more applicable to artists who are painting earlier in their careers. That's going to be more along the lines of the segment that I was talking about, that was, call it, under the $500 to $1 million realm, which is not an area that we would be the most comfortable investing in. We're not necessarily exploring the venture capital of art investing, at least at this point in time. But so the artists that we invest in, what's interesting to note in the art market is that trends in the art market tend to stay in place in the art market for many years at a time. You can think of this somewhat along the lines of almost maybe kind of like a momentum strategy. If I were to use that term in the traditional investment world, it's somewhat along those lines, except that in the art market, those trends quite literally can stay in place for many years, right? So an artist who might have a series that has generally been appreciated by collectors and investors around the world for some period of time, that series will probably continue to be appreciated attractively by investors for a longer period of time. Same thing might take place on the flip side, right? If an artist painted a series that was maybe during a sort of less opportune period of that artist's life, maybe the work that artist painted at that time has not sort of been appreciated quite as favorably by a lot of collectors and investors, that series probably will remain relatively unattractive for longer periods of time as well. So these trends tend to stay in the market for quite some time. And then on the sales side, I can't help but mention that just a few months ago, we actually hired an individual who was the now former head of Bank of America's art services business. Bank of America basically had the largest art services, has the largest art services business in the U.S. And so we hired the now former head of their business specifically to focus on the dispositions process. Dispositions, fancy way of saying selling the art. And so our thinking is basically, given the role that he was in for so many years, he probably has a very extensive network globally of collectors and individuals that he was engaging in the art market. So ultimately, when we're going to be continuing to sell paintings over time, which we've already sold a whole bunch of them so far, but we're obviously going to continue doing that over time, he's going to be heading up that dispositions process.
It's funny you say that. Just anecdotally, I got a call from someone who's a client of ours. I'm also a client of them at Bank of America, and she's like, "Hey, I happen to be in your neighborhood tomorrow. I need to appraise this art because we have a big loan against it." So she was actually going to. She herself was not. She's accompanying the appraiser. It's just kind of funny you mentioned that. So yeah. Anyway, I think Sam's a big fan of like momentum-based investing. So Sam, you got anything on that as you think about kind of the art world?
Yeah, I was trying to put it more into the context of how people should think about it. Let's just say we go down the route with the democratization of the space in terms of being able to purchase, and then who would think about buying it? Getting access to these types of assets, that normally wouldn't. But where would it fit within someone's, I guess, greater, more diversified portfolio? I'm just trying to get a sense of. We think about equities as behaving a certain way within an economic cycle, bonds the other way, but where would it fit within that type of portfolio? So what type of environment has art historically done well? Where has it suffered? What drives some of those inflection points in the momentum or the trend?
Yeah, so art, let me put it simply by saying art has the most unique correlation profile of any asset class that I have ever seen in my career. I want to be real direct and upfront about that from the outset. So if you measure art's correlation to any other major asset class, I'm talking about large caps, small caps, the ag, international bonds, emerging market debt, local emerging market debt, private equity, hedge funds, I mean, literally all of the major asset classes, the correlation of art to any of them is consistently close to zero. And that is extraordinarily unique because usually, if you ever look at the correlation of any asset class, any major asset class to other asset classes, you usually see the same pattern, which is inevitably you're going to have a low correlation to something, and you're probably going to have a higher correlation to something else. I'm not knocking or criticizing any other major asset class. It's simply sort of a statement of fact. That's the world we live in. It's a mixed bag. But with art, it quite literally has a consistently near zero correlation to any asset class that you measure it against. What that tells you by definition is no matter what you might already have in your portfolio, adding that art allocation to the portfolio is going to be a pretty good diversifier precisely because it's not correlated to anything else in your portfolio. Now, in terms of the portfolio and let's say sizing, I'll start by saying, by citing external research in the interest of trying to be as objective as possible here. So Citigroup has actually been very forward thinking in their asset allocation modeling, in the sense that they've actually been able to include art in their asset allocation work for their ultra high net worth clients. And what their own research has basically shown, and I'm going to caveat this properly. So for investors who have the ability to have a portion of their portfolio in illiquid asset classes, right? So that's the caveat. You have to be willing to have a portion in illiquids. They would recommend allocations of from 1.4 to 4% to art. So that's citing external research. Think of it as low to mid single digits for art. We've also done some of our own asset allocation work, mostly because I did a lot of this in my prior life. And while the way that I wanted to approach it was not so much along the lines of what would an optimized allocation tell you should have to art. And the reason I did not want to approach it along those lines is because I knew if I'm working at a company that's making art an investable asset class, right? It's not necessarily the most objective or credible for me to say what an optimized allocation to the art market should be. So what I decided to do instead was to just measure how frequently does a portfolio with art do better than a portfolio without art. And all I did was I worked off of a simple 5% allocation. So when I measured that, and I did it against a basic 60-40 portfolio, I did it against a very well diversified but still liquid portfolio, and I even did it against an endowment portfolio with healthy allocations to illiquid assets. So with all of those different portfolios, I measured if you put art in it, how frequently does it do better? And it turns out in just about 100% of 10-year periods, you will improve your portfolio Sharpe ratio with that small 5% allocation to art.
Yeah, no, I mean, it's a very powerful thing too. And, so when you talk about getting, putting together a fund or a strategy for investors, how do you think about doing that and not becoming kind of that marginal bid to your own self? Like, what I mean by that is you're competing against yourself. You're forcing prices up because you have new capital to deploy. So how do you stay disciplined and be able to really continue to monetize that high Sharpe ratio investment? The understanding that, it is a finite asset, right? There's a limited number of supply. How do you think about it? Yeah.
Well, so, it's funny what that question is. It's one of those things where if we ever got to that point, I would consider us to be wildly successful, right? If you can ever get to the point where you can move the market ultimately. The interesting thing though is, so we didn't talk about this at the beginning. We didn't talk about the size of the art market. So the art market globally is $1.7 trillion in size. Now, just to put that into context, if you take a look at the US private equity industry, that's $3.4 trillion in size. So the art market is, let's say, roughly half the size of private equity in the US. Now, the reason why I'm using private equity as a point of comparison is because for most investors who have some familiarity with private equity, they would willingly and readily acknowledge that the private equity industry in the US is a very large industry. And so I would argue that anything that's half the size of private equity is probably quite large too. So the art market, $1.7 trillion in size, and here's really the kicker though. How many firms are operating in the private equity industry that's 3.4 trillion? You're talking about more than 9,000 firms operating in that space, all competing against each other. How many firms are operating in the $1.7 trillion art market? with this sort of approach that we take, quantitatively driven, the analytics, the qualitative how many institutions out there are doing that for the $1.7 trillion asset class called art? It is effectively Masterworks. And so that's sort of a long-winded way of answering your question. You know, how do you kind of make sure that you stay disciplined and you're not sort of moving the market, I mean, like I said at the beginning, I would love to say that we get to that point, because that would mean that we've essentially, you know, securitized the entire $1.7 trillion market. But let's just say that at the point we're at right now, we have just only begun to scratch the surface of that asset class.
No, I think that's a legitimate thing to really think about too. And then, you know, as you're talking about, you know, kind of, you have a disposition strategy, you have an acquisition strategy, you know, how do you think about managing the portfolio, right? Because again, you need to have the monetization. Like, do you approach it from like putting on your PE hat, right? Where you say, okay, once I sell this, it's gone, right? Maybe there's not another someone to sell a partial ownership. So how do you think about managing your portfolio on the day-to-day, month-to-month, week-to-week process?
Yep. So a lot of that, the way it works in the art market, I mean, ultimately, if your network of contacts in the art market is significant enough globally, then you start to develop a good understanding over time of who are the collectors or who are the individuals all over the world that are interested in this particular type of art, or maybe that particular type of art. So you start with this understanding of who are all of the entities that I might prospectively and potentially engage with at some point down the line to sell that which we currently own. That's
so
one
do you
part.
talk to a lot of brokers or you know, I don't know what they're called in the art world. Obviously, I don't have someone to
You might be
yeah,
referring to dealers.
dealers. Okay, yeah, you're right.
So we have connections with a lot of collectors directly all over the world. We also have a lot of dealers in our network. Basically, our network of art market participants globally is about as extensive it could be. When you combine the acquisitions team at our firm with the dispositions team and the network that the gentleman from Bank of America that he ultimately brought here, that is an enormous network of global contacts to engage with in the art market. So one part of it is knowing who it is that is interested in different types of art. And so therefore you can start to think about, even the moment you buy a painting, you can already start to plan at some point down the line, all right, who do we know that might have interest in this type of artwork a year or 2 or 3 or 5 years after the fact? So that's ultimately one element of it. But the other element is having a good understanding of what types of art are trending more favorably or less favorably at different points in time, right? So that starts to give you an idea about when it's a more opportune time to sell a particular painting, as opposed to maybe holding a bit longer a different type of painting. And, I talked a lot about the database, the proprietary database that we built, but there's sort of this additional layer of kind of data analytics that we have, which is, around the world, there are always sort of auctions and sort of these art-oriented events that take place. And what we do is we actually send individuals to attend all of these events. And while they are there, they are quite literally counting the number of people that are bidding for every item that goes up for sale. And they count that relative to how many people are at that venue in the first place. So what you're able to do over time, if you start to collect all of that data for a few years, is you start to build a time series, which basically gives you an idea about what we're calling bidder depth, which is a way to understand, okay, does it seem like the market for this type of painting seems to be accelerating or becoming more attractive? Is the market for this other type of painting maybe decelerating or becoming slightly less attractive? So we're basically doing a lot of this kind of mechanical oriented data aggregation, because frankly, there really is no other way to do it in the art market, at least so far. And we're doing all of that to help inform our purchasing and selling decisions. And so ultimately that helps us to decide when is the good time to sell the art. And we've done that several times now.
Yeah, Allen, earlier on you defined kind of your potential addressable universe within the art space. I don't think you said digital art, and was just curious as to your thoughts around that, the recent trend.
Yep.
And maybe that hit an inflection point, right? And
Yeah.
seems to have gone the other way around now. But just interested in hearing your thoughts around there, how you guys viewed it.
Yeah. So, digital art, NFTs, these are questions that they seem to come naturally to us, precisely because since we're the company that's making art investable, to the extent that digital art can be considered art, it seems like a reasonable question to ask. But what we struggle with NFTs and digital art is actually, it's a few things. Number one, if you think about what we are doing, we are taking an asset class that has quite literally existed for centuries. And one of the characteristics of that asset class is that it's real and tangible, right? We're talking about paintings that usually sit in a museum or as a prized possession in someone's home. So we're taking that type of asset class and making it available to investors. Now, you think about NFTs and digital art, number one, well, how long have they existed? Most certainly not centuries. In fact, it's probably more like 2 years. And on top of that, it's digitally oriented, so it doesn't have that physical kind of tangible element to it that what we're investing does have. So those two big differences make it sort of hard for us to wrap our minds around how and if we should actually make NFTs, let's say, an investable offering that's available through Masterworks. I have to be candid and tell you that over the last few years, our founder has he's actually, he's been interviewed a whole bunch of times, and all along the way, he was kind of expressing a healthy level of skepticism about NFTs and digital art, usually along the lines of, we haven't really sorted out exactly how do you value them? How do you think about them? And quite honestly, I'm not sure anybody has sorted that question out to this day. And nevertheless, when this year started and, crypto was sort of struggling, the NFT market has kind of struggled, to say the least. And so we're kind of viewing it as almost, in a lot of ways, the proof is in the pudding, right? We're taking this real tangible asset class. It's existed for centuries. We're making that investable. It's hard to make the same argument for a 2-year-old asset class that's not tangible and kind of exists primarily in the digital realm.
Okay, fair enough. I did notice how Sam called those digital art, and he did not use the phrase NFTs. It's funny because I went to an event at the beginning of the year, and with your ticket, you got an NFT. And I noticed I went to another event a couple months later at a very similar venue, and I got a digital art for it. So that was after the price collapse of some of these NFTs. So it's funny the euphemism or just the way we refer to things as well. So I guess I kind of as a last question too, before we really let you go is, how do you think about achieving diversification within the art realm, right? You have this, niche that you said you focus on, the post-World War II, contemporary, certain size. How do you achieve that diversification? Is it owning different artists? Is it looking at different trend items? How is your team building that from a risk management standpoint?
Yeah, so ultimately, when an individual comes to our website, masterworks.io, they can sign up for an account. The account is free to sign up. You get access to a reasonable amount of our data that we make available to investors just for signing up on our website. And ultimately, what happens is they get scheduled for a call with an advisor at Masterworks who kind of talks them through the different offerings that we have available at any point in time, the investment merits of each of those offerings, the risks associated with each of those offerings, and they start to give an idea about how you might be able to build a diversified portfolio by investing in a few of those offerings. Ultimately, the different paintings that we have available on the website, there are typically, I'm going to estimate and say it's roughly 5 to 10 paintings available at any point in time. And we're always adding new paintings to the website as well. So ultimately, investors actually do have very much the ability to build a diversified portfolio of art through us. They do it initially via conversation with the advisor, but then also once their sort of account is up and running, that they are able to make allocations on their own as well. But I guess I did want to really emphasize that this whole first conversation with one of the advisors on our team, it is actually very much along the lines of the conversations that financial advisors often have with their own clients, right? So you talk about your investment goals, you talk about the risks associated with the investment. You want to make sure that what you're recommending is suitable for the investor that you're talking to. And ultimately, we are doing quite literally the exact same thing, except that we're doing it for investing in art, as opposed to, you know, the remainder of a portfolio, which is what financial advisors usually do it for.
Right. I think that's very helpful too. I mean, you know, it allows people to really, you know, kind of get in that, you know, getting that access to an investor that they may not be able to buy, or an artist they've been able to buy because it's just too big of a percentage of their overall allocation. So
Exactly.
I think it's very helpful. So, you know, Alan, I really want to thank you for spending the time with us today. I think it's very informative. We're very interested in the concepts you guys are bringing to this world. We think it's really, really innovative, and it is a way of truly democratizing. I hear this so much in finance. I think about just getting access to what is usually the ultra wealthies are the only people that can participate. I think that truly is a democratization. So, you know, for our listeners too, how can they find out more about Masterworks? How can they follow you guys? What's the best avenue for them to contact you guys?
Yeah, the best way to do it, honestly, is to go to our website. It's masterworks.io. And on our website, you'll see a link where you can sign up for an account. Like I said, signing up for an account is totally free. You'll have access to the different offerings that we have available. You can take a look at them on your own. You can ultimately get a lot of pricing information. So we have a price database. Investors who are interested in learning about the pricing for lots of different works by lots of different artists. You can look all of that up. We have that capability for investors too. And ultimately, you can sign up. You'll have an introductory call with an advisor. They can talk you through the process. You know, ultimately, it's entirely up to you, of course, whether to invest or not. But we try to honestly make the process as seamless as possible.
Yep. All right, Alan. So again, Allen Sukholitsky, the Chief Investment Officer at Masterworks. So thanks for joining us today, Alan.
Thanks so much, guys.
Yeah. Hey, but Alan, before I let you go, I'd be remiss. Sam's sitting there smiling. I can see him. And what he wants to do is introduce you to his favorite part of the show. So we got one last segment before we let you leave. Sam?
Yeah, I was smiling because it almost seemed like you're about to close, and I thought Alan might be off the hook. I think he did too, but you're not, Alan. So my favorite part of the show is called Sherman Says. It's where I will provide a prompt, a series of alternating prompts, I should say, between you and Mr. Sherman, to which I'm trying to elicit a top of mind, concise response. And as a first example, I'll pass it off to Sherman for artist or artwork you would like to buy.
Twombly. Cy Twombly.
All right. Over to you, Alan, for yours with art price volatility. Volatility of art price.
10%.
All right, Sherman, art versus gold.
Well, you know, unlike what the Buffett quote was that you can't touch it and fondle it, a lot of that with gold. I think with art, you can really appreciate it too. So I know some people have an affinity for gold. They want to look at it. I know we have an analyst who just loves to stare at his gold lighter and he's fascinated by gold, but you know, I think it's appreciate the beauty in it too. And to me, there's something about having art that's actually brushstrokes that, you know, when the light hits it and everything, there's just something magnificent about it.
Absolutely. Yeah, that prompt was courtesy of our gold bug too. So as you probably figured there.
The
So
sharp reading of art is better, irrespective of time frame than gold, you know, but I'll let Alan confirm.
Yep.
all right, over to you, Alan, with, let's see here. What's the most exciting artwork you or Masterworks has acquired?
I would say our Basquiat paintings. Basquiat is a market that's accelerated pretty attractively for the last few decades. It's a market that we're very favorable on. Jean-Michel Basquiat.
All right. Kind of similar to Basquiat, but this is a different type of forum. Let's say Tyson Fury for you, Sherman.
What?
Tyson Fury.
How does that relate to Basquiat?
He's an artist in the ring, I guess.
Yeah, so it's a similar word, you know. Instead of Basquiat, it's boxing. I mean, they're kind of similar.
Okay, all right. I see what you did there. I remember seeing there's a Basquiat Warhol, the battle, like announcing like a fight. If you remember, they did a join thing. We've all seen that. It's a famous poster. So I'll give you that, Lau. And bring Tyson Fury back. He needs to fight. You can't be this big champion. You got to defend it. Go out on your shield. You know, he's the bad dude. He needs to keep fighting.
Yeah, I guess stop waffling a little bit on your intentions, I suppose. Not yours, but his.
Yeah. Like, I'm retired. I'm not. I mean, you know, every fighter does that. No fighter retires the first time. You know, you have to have like 5 retirements, and usually you got to lose before you quit.
Yeah, you gotta get beat out of you, I guess, unfortunately, figuratively and literally.
Yep.
Back to you, Alan, with favorite thing to eat and where to get it.
Oh, that is so easy. Sushi by far. Sushi is my comfort food. There's a restaurant where I live in Connecticut where that's definitely my favorite sushi. But I would say that most really good sushi places in New York City are also my favorites.
All right, sounds good. Anything you don't eat off of the menu?
Uni, believe it or not.
Yeah, I guess something about gonads is not appealing to everybody. So
yeah, well, the uni is one of those things that like it's so distinct that like people either love it or hate it. It seems
That's
like.
exactly right. Yeah,
I'm usually from the hate it camp, but you know, out on the West Coast too, Santa Barbara's got some of the best, and so like, you know, there's time if you're at a high end place and it's the you know where you get the fixed setting. I can't think of what it's called off the top of my head. The
omakase.
Yeah, if you get that and it shows up, I'll eat it though. So, but I never got in my way.
Yep.
Yeah, it's an acquired taste for sure. All right, Sherman, with you, 1849, and this is homage to NFL about to start, I suppose, in the week, I've been told.
I mean, there was this thing called the Gold Rush. You know, it happened a little earlier too than that. But are we talking about California history? But yeah,
talking about 49ers.
Yeah, I know. Yeah, it's you know, I just can't wait for Aaron Rodgers to play the Niners in the playoffs, Sam, and just lose for the 5th consecutive time. So, Alan, Sam is a Packers fan, and my team beats them in the playoffs every year. It feels like
pretty much. Yeah.
I don't know.
You guys are still friends. That's good.
Yeah, I don't know how I feel about Trey Lance. You know, I'm still a Jimmy G guy. He's above median. You would think he's a below median guy, as much crap as everybody gives him, but he's not horrible. He just can't get the big game. So, as I told one of our colleagues, we'll just let Jimmy G live up to potential, get him to the Super Bowl, and let Trey win the Super Bowl for him.
Yep,
right?
Yep.
Anyway.
All right, over to you, Alan, with, let's see, I lost my page here. Trending artist.
I don't want to take that one for obvious reasons. That you know, we're constantly in acquisition mode.
Gotcha. Fair enough. We'll leave it with that. Leave it at that. All right, Sherman, yours favorite artist.
That's a tough one. I'll go with the cop out and just go with the Van Gogh. I just saw some recently this summer, and they're just amazing too. And I like to see the evolution of when he started to go a little more mad. And so, for instance, if you see the Starry Night, like that's at the Met, or I'm sorry, the MoMA in New York, and you compare it to the one that's at the Musée d'Orsay in Paris, you just see how his mind changed, right? You can see it in the huge strokes. And so that kind of evolution, unfortunately, we know that he was going mad at the time, but just really cool. And I've been to the south of France and to his insane asylum where he was, and just to actually go in that bedroom, you've seen it's iconic. I just have a connection with that. Like, just it's cool. It's like the reality of things, but blended into this kind of abstract world. So,
yep.
All right, and you're going to finish us off here, Alan, with your least favorite yet immensely popular artist.
Least favorite yet immensely popular.
I got one.
What's yours?
I would use Kuntz. I do not like Kuntz, you know, so.
I can't.
You're gonna upset somebody by saying.
Yeah, I can't do it. I can't give an answer to that. I just can't.
All right. Well, you're let's see here. You're 3 of 5, so that works.
It's close enough.
It's good. It's good.
For the Sherman show, we consider that a passing grade. 60%.
Absolutely.
Yeah, I'll take it.
Yeah. So, Alan, thanks for playing along there. That was good fun. You know, we really appreciate the time. Thanks for telling us more about what Masterworks does, your role there. And again, for those of you that want more interest, remember that's masterworks.io. If you're sloppy like me and type in masterworks.com, though, it does have a redirect. So it'll get you to the right spot as well. So thanks again, Allen. It was a pleasure chatting with you today.
Thanks, guys.
Yep. Thanks again. And that was the latest episode of Sherman Show. As mentioned at the top, you can find these at youtube.com/DoubleLine Capital. You can also get this where your favorite podcasts are served: Google, SoundCloud, Stitcher, iTunes, and other things that Sam won't tell me about today. So again, tune in soon for the next couple of weeks for the latest episode of the Sherman Show. Take care, and until then.